I'm going to shift gears one more time, Jody, into investing. So this is an interesting topic. So you have the job, your college debt is still there, but under control. The one thing that I took away early and I started doing super early, and I think for the most part has paid off for me, is investing into your future in terms of your retirement investing into your 401k. Very few of us out there are going to have a defined pension plan. What I mean by that is a government pension, something that when you graduate, you're guaranteed X amount of dollars for the rest of your life. Most pension plans, most retirement plans are 401k driven now, where you have to make that investment. Your employers make an investment on your behalf. I'm a very big proponent of, even if you have a defined pension plan and you're lucky enough to have one, also take advantage of the 401k and take advantage of every opportunity of that 401k plan that you have at your job. And we could probably do a whole podcast on this, but I'm going to hit the highlights from my perspective, what I've learned over time. Always put money in your 401k at least up until the company match, because if they're going to match you dollar for dollar up to $2,000 or $3,000 a year or higher, if you don't invest in your 401k, you're leaving that money on the table. So that's important to be aware of. The second thing is this whole debate of Roth IRA versus a non-Roth IRA. We're not going to get into the particulars now. One is pre-tax, one is post-tax. Do your research. Maybe we could do a more deep dive into that at some point, Jody, as a podcast. But make sure you just start with whatever you're comfortable with. My personal advice is to go non-Roth and just go with a traditional 401k, but we could probably beat that up, and other financial folks might beat me up for that, but that's just my personal take on it. You also want to make sure that from a 401k perspective, you're not borrowing against it, you're not taking money out of it. If you can not do it, right? There's certain situations, and Jody, we've talked about this before, where it would make sense to take money out of your 401k or take loans against it, but if the rule of thumb is if you don't have to, don't. Right? Keep the money in there, let it build, let it invest. Also, do your research. If you have a 401k plan, look at the different funds you're investing in. Google different types of making sure your portfolio is diverse. There's certain age brackets where you could put more in equities versus more in fixed income. And I know I'm hitting you with a lot of different things, we've listened back to some of our investing podcasts and some of our podcasts from the past. You'll get bits and pieces of investing. But I think in general, just start. You get that job, sign up for the 401k, research what it does, pick the funds, and just invest.